Howdy there folks, welcome into today's video. So I was reacting to a video on my new channel earlier today, and basically it was interesting. I found out in that video essentially that the worst week for the stock market is basically next week on average. They looked at like the calculations of the worst week in the stock market history on average, and what they found essentially is next week, okay, this week coming up, that is usually the worst week for the stock market of all time, okay? And so I want to discuss this. Are we going to have a really, really bad week next week? And what are we looking at in kind of that situation? And what's my opinion on this? Because, you know, that's definitely scary to hear that, oh boy, it's coming, okay? Next week's the worst week on average. So we're going to talk about that, okay? We're also going to talk about home builders are starting to drop price. We're also going to talk about a lot of different things in relation to stocks and some things going on in the stock market that I think are very important to pay attention to. I actually bought 4 stocks here today. I'm going to share what those 4 stocks were with you guys here today. Plus, we got a lot more to get into. Hope you guys enjoy. This is always going to be a jam-packed video with a lot of different things in here. Hope you enjoy it. And also, if you're looking to join my private stock group, get access to the Discord chat, all the course curriculums to learn everything I look for in stocks, how I run portfolios, as well as get access to the moves I'm making in the market and those sorts of things. Check out the pinned comment down there to get full access to that, okay? Alrighty, so where I want to start here is with home builders, okay? So home builders are lowering prices as sentiment falls for 9th straight month. Yeah, I don't think this is ending anytime soon. I think home builders, the interesting thing that I've seen with the home builders is they have maybe slightly started to drop price. In my personal opinion, the home builders are going to have to get serious. Over this next 6 to 12 months, they're going to have to drop price in a massive way if they want to move homes. Because what's happening here essentially is inventories are piling up across almost every state in the United States. Sellers are starting to drop price because they're not moving their properties, right? So what do you do if you can't move your property? You drop price. So I'm seeing consistently properties values dropping. Even if you look at estimates of properties, you're starting to see them drop, okay? I don't think that's ending anytime soon. So the home builders, in my opinion, are just, they're in for a lot of pain, and I don't think this is magically fixing itself tomorrow. I think they're going to have to get much more serious about dropping prices. Because the thing is with a lot of these home builders, you know, and I pay attention to a lot of them, like they'll drop their price like this much, okay? Or they'll try to throw in a couple $1,000s of like extra incentives. It's like, what's a couple $1,000s in extra incentives on a $500,000 house? Let's say, for instance, something like that. Like, give me a break. It's like nothing. And so they got to get more serious. There's, you know, it's going to get worse before it gets better for them, okay? Well, you'll know you're getting close to a bottom in housing when the home builders really start to report some really bad numbers quarter after quarter, and when they really start to incentivize buyers any way possible. That's when you'll know, okay, we're starting to get close to a bottom in housing, and we're not there yet, okay? It hasn't been enough pain yet in that whole realm, okay? Now, I thought this was interesting because what you're seeing across the financial markets right now is things happen that we haven't seen happen in 10 years, 15 years. For instance, the 10-year Treasury yield jumps to 3.51%, the highest level since 2011, 11 years ago. It's extraordinary. Look at this. The yield on the 2-year Treasury bond rose 9 basis points to trade at almost 4%, trading around levels not seen since 2007. Since 2007. So this is the sort of financial markets we're in right now, and this is why it's such a chaotic time in the market and such a scary time for a lot of investors, because you're seeing these things happen that we haven't seen in 10, 15 years, and people get very scared, or inflation numbers that we haven't seen in like 40 plus years, right? And so it's an interesting dynamic to watch how all this is kind of playing out, okay? I just saw this. It's completely random, but I thought I would throw this in the video. This was, you know, the good old, yeah. And my gosh, look at this stock price. Topped out around, what, 458? Oh my gosh, okay, 100, wow, okay. I thought some growth stocks been hit bad. That one got hit. No, this is really bad news, okay? This is really bad news. It has nothing to do with if you own Ford stock or not, and I don't own Ford stock. But, I mean, this is bad news for, honestly, the financial markets, because we're still have a supply chain problem. Ford warns investors of an extra $1 billion in supply chain costs during the third quarter. Supply chains still are not fixed believe it or not, for manufacturing companies. Ford, on Monday, warned investors that the company expects to incur $1 billion more in costs than previously expected during the third quarter due to increased costs and supply chain issues. Ford said supply problems have resulted in parts shortages, resulting in roughly 40,000 to 45,000 vehicles that haven't been able to reach dealers. The company expects to complete and deliver these vehicles to dealers in the fourth quarter and is still projecting 2022 adjusted earnings before interest and taxes between $11.5 billion and $12.5 billion. Shares of the company fell about 5% in extended trading. Right when you thought maybe supply chains were fixing, it's still not fixed. And the issue is China keeps locking down. That's causing problems because we're so still dependent upon supply chains, and our companies are trying to be less dependent upon China, and that's good. They're either taking some manufacturing in the United States, or they're taking it to other countries like India or just other countries in general. So that's good. But the problem is it's not like you can't do that overnight. So this is like a whole process that has to work out over the next 5-10 years. And so when you have these lockdowns and things like that, it causes just a mess of problems. And here's the thing, okay? Let's say I need to put this television together back here, okay? There's a million different parts from a million different companies that are going to go in this LG TV here, right? Well, the problem is all it takes is me to be out of a couple parts, and I can't sell that TV. If there's a couple critical parts and I don't have another supplier lined up for those parts, I can't sell the TV, right? It's crazy. I was talking to a gentleman that works for Toll Brothers recently, and he was telling me they won't even sell a lot of homes now with appliances in some of these markets because they can't get their hands on the appliances. So it causes a mess in trying to deliver a home, and then they don't have appliances, such as like Sub-Zero, Wolf Appliances, and some of those other brands that, they just can't get their hands on. So it becomes too much of a mess. So they'll sell you the home, but not with the appliances right now, which traditionally for home builders, they'll sell you as much as possible. Like, hey, you want the appliances? Because they'll make margin on everything in there. But for them, it's not even worth it. Think about that for a moment, right? That's extraordinary when you kind of consider that. So, that's unfortunate, and it is part of what's going on still. And if you're in any business that has to do in the manufacturing sector, it is something they're going to have to continue to deal with, okay? In regards to Tesla, why is this stock held up so tremendously well? Despite all the fear, all the pessimism in the markets, all the scariness, everything, supply chains, blah, blah, blah. Why is the stock held up relatively decent? This is where the stock entered this year, right? And this is where the stock's at right now. It's hardly down. It's amazing. And I think one of the big factors on why Tesla stock is holding up so well, despite everything that's going on, is I think it's their execution in relation to supply chains. And I think it's the numbers this company has been able to put up despite the supply chain challenges. And I think people are starting to view Tesla as the number one most well-run auto manufacturer in the world because they're watching, at least from investors' perspective, because they're watching how well Tesla's been able to handle everything in relation to supply chain, which has been absolutely amazing. Like, as a Tesla bull and a Tesla shareholder, I've been shocked and amazed and very happy to see what has played out there. I'm just like, how have they executed this well and put up these sort of numbers despite everything going on bad in relation to supply chains? It's been amazing. And I think that's why this stock has held up so dang well this year, to be quite honest, despite all the bad stuff going on out there, okay? Mr. Softy on the DL has secretly just pretty much hit right around a new 52-week low here today. And, in regards to Microsoft, this is second biggest big dog, only after Apple, right? $1.8 billion market cap. And I've always viewed Microsoft, I don't personally own the stock, by the way, but I always view Microsoft as, arguably the safest of the big techs, because once they get you in their ecosystem of Microsoft products, it's hard to leave. And the ingenious thing that Microsoft does essentially is if they see another product kind of popping off, they'll just basically copy that and maybe make a worse version of it, but they copy it, put it into their suite of products, and then kind of you get it for free, right? And so, it doesn't matter if it's a Zoom or a Slack or any competitors in that space. They see it, they're like, okay, let's copy this. We're probably going to make it not nearly as good, but we're going to throw it in our product suite, so it just kind of keeps people engaged. So it's some don't like the business model, and I can understand that because it's kind of annoying when there's a company that just will literally copy whatever you do and then just throw it in a product for free. It seems almost a little anti-competitive, but it's what Microsoft does. But yeah, the stock is it still is having some trouble. And, to be at pretty much a 52-week low today is pretty telling on the state of that particular stock. Same exact thing with Google McDougal. Google McDougal at one point today pretty much was at a 52-week low here today. Something's very telling in that, right? Zillow, I haven't really looked at this stock in a long time. I took a peek at Zillow today. First off, Zillow is down almost 16% over the past 5 years. I mean, to lose money in a stock over 5 years is rough, right? I mean, to lose money in a stock over, or be down on a position over a 6-month span, 12-month span, even 18-month span is kind of understandable, but 5 years, no. So this stock's down over the past 5 years. And the interesting thing with Zillow is when you think about the real estate market and the massive cooling that's going on in the real estate market, right? I mean, that does not bode well for Zillow, ultimately. Like, people don't like to log into Zillow every day to see their home value goes down, down, down. That's not so fun for most people, right? It's fun when it's going up and up and up, and people love to go on and see this estimate. Oh, our house just appreciated another $5,000 this week or this month. Oh, man, another $10,000. Woohoo, okay? That's real fun. But yeah, when it's going the other way, people are like, no, I'm good. I don't need to see this estimate. I don't want to know that my house just dropped another $7,000 in value over the past 2 weeks. It's not so fun, right? And obviously, with a lot of real estate investors leaving the market now, yeah, that doesn't bode well for Zillow. Also, I think the important thing to understand about this is investor psychology in relation to a stock, okay? Because Zillow is a very, very telling situation here, okay? And this goes into investor psychology because the stock was down another 3%, 3.6% here today. Here's a way investors kind of look at a stock like Zillow, right? They say, okay, the best thing ever just happened to Zillow last year. So that's the peak. How can it get any better anytime soon? And that's the way investors look at it, right? And I'm not going to say they're wrong or they're right, but it makes sense to kind of, understand that perspective, right? Of like, the real estate market was as hot as it will ever be last year, or at least for a while, right? Because interest rates were insanely low, people were flush with cash, stimulus money, blah, blah, blah. Plus, a bunch of people wanted to move because they'd been at home and they realized they wanted a new home. You had mass amounts of people relocating to other places because work from remote was taken off. You had all that go on. So we had arguably the hottest housing market. So now, whatever is going to happen, it's going to be much less. And it's the same type of phenomenon that a stock like Zoom has right now. And I've listened to Kathy Wood talk about Zoom stock because it's one of her biggest positions. She's very frustrated with kind of the way that the stock price has reacted, right? When you look at Zoom, people just view it as 2021 was the peak for them in terms of excitement, hype around the stock. Everybody working remote, Zoom meetings being like crazy. And so even as Zoom's revenue can go up in future years, people just don't get as excited about it. There's not that hype around it anymore because they went through the best thing ever already happened for Zoom. And that was everybody had to work remote in 2021. And obviously, the second half of 2020, that was the best scenario. And so that's just kind of the way people view it. And, it's just something you have to obviously work for. And the main thing to kind of think about in regards to this is, where's a company's business model going over the coming years, right? And yeah, they might have had their best case scenario, but now the stock's down so much that it's priced in so much bad news and negativity, right? So these are some things to kind of factor in there in relation to that, okay? Now, if I look at the stocks I own in terms of the winter chicken dinners tonight, man, who led the pack again? It was Fubo. Fubo is killing it. I mean, just in terms of stock price, their business model is killing it too. Wait till the next few quarters numbers, okay? But look at this stock. I mean, it's up another 6.5% today. I mean, it's in a league all its own, and we'll see how far the momentum goes. But I think it's going to stretch for a while, okay? Here's what's going on, okay? If you look at Google Trends, Fubo's gone to the Google Trends have taken off over the past month for Fubo TV. But the interesting thing about this is not new for Fubo. Basically, in the first 3 weeks of September, the Google Trends usually takes off for Fubo. And the reason being is college football season starts and NFL football season starts, okay? Now, Fubo's known for being, if you're into sports, you want to sign up for Fubo over any other competitors out there, okay? But for football especially, if you're a big college football fan or NFL fan, like, you've got to have Fubo. Like, that is the premier, and especially if you're a college football fan. And so basically, mass amounts of people sign up for their service in September and search out Fubo, okay? But the interesting thing is, we're seeing a move in the Google Trends for Fubo like we've never seen to this extent before, which means when I show you these numbers we're about to look at, they must be acquiring so many customers and collecting so much money right now. I don't even know if they know where to put all the money, okay? It's ridiculous, okay? So if we go back to 2019, big spike up for Fubo, as they have every September. Look at the big spike up there, okay, in the Google Trends. But that's literally laughable joke compared to where we're at right now, okay? Let's go ahead and look at 2020. So 2020 right there, September 13th through the 19th week is where the Google Trends peaked right there at 62. Yeah, we're blowing those numbers away, okay? 2021, well, peaked at 70. We're blowing those numbers away, okay? And so Fubo, I don't know what they're going to report in their upcoming quarter, because basically this is the last month of their quarter they're in right now, and then the next quarter is October, November, December. But they also retain clients at a very high level. And if you look at their retention numbers, they do a phenomenal job. So when they collect all these customers, these new customers signing on for the service, they do a really good job of keeping those customers on using Fubo, okay? So that's phenomenal. So that money just keeps recurring month after month after month after month and years to go in the future. But I mean, I don't know what they're going to report for numbers, but it's going to be ridiculous. Like, just based upon Google Trends, the new subscriber numbers, the revenue numbers, it's going to be ridiculous. So I can't wait for those numbers to come out. And then, like I said, the great news is they retain it's not like it's a one-off product where you sell it and it's like, okay, great, our September numbers are great. And then the great news is Fubo collects those customers and then retains the far majority of them, and that revenue is going to occur in October, November, December, January next year, February, and just for on and on and on for potentially years and years and years to go in the future. So that's why it's a pretty special business model. It's once again, it's a speculative stock because it's a money loser right now, but I think they're going to get to profitability faster than actually they think because of what I'm seeing in the trends for Fubo. It's ridiculous. And their add-ons, from what the company said, all add-ons are straight profit. So, something to think about. Alrighty, so next thing up here, what stocks was I personally buying today? I bought 4 stocks. So I bought some Palantir shares. I bought 322 shares of Palantir. I bought 50 shares of Shopify here today, which I haven't bought much Shop, but yeah, I thought I'd build that position a little bigger there. I bought 20 shares of Meta. That was my biggest buy for the day here today. And I bought 270 shares of the Chef, which the Chef kind of got obliterated on Friday and today. I don't know, maybe something weird going on there with options, but I'll gladly pick up shares there. So picked up some shares of the Chef there, okay? Now, next up, let's talk about this notion of, next week being the worst week on average for the stock market. And first off, September in general is a bad month for the stock market. That's something important to not just remember right now, but remember this for years to go in the future. September is generally a very bad month for the stock market. October, generally speaking, is a very bad month. I don't know what it is. It's just the way it is. Okay, September, October, usually bad months for the stock market. November, December, usually very good months for the stock market. January can be a very, very good month for the stock market as well. Optimism about the new year. Sometimes you get some of the financial results rolling in from kind of the Christmas quarter. So, that's just usually a pretty, let's call it bullish 3-month span. But in relation to kind of what's going on here, okay? So here's my thoughts on this, okay? First off, the NASDAQ has gone down 9.5% over the past 1 month, if you pull up a 1-month chart, okay? So we're in a position where the market's already been sold pretty darn heavy going into this scary week where, it's usually the roughest week in the market. And that's not usually to that extent, okay? Big sell-off. Now, I do worry about it a bit. So first off, I don't worry about any news coming out next week unless there's some company shocks everybody and reports some preliminary numbers or something like that. There's no massive news coming out next week. Nothing, okay? So you're not going to have any massive news to shake up the market. It would just have to be something reiterated that's already going out. The only way I worry is if this week was a big pump week for the market and we moved up to like 11.8, something like that for NASDAQ, 11.9, maybe right under 12. Then we could set up for next week to be a rough week and basically it just sells off all the gains we made this week and just sells off into that. Outside of that, I'm not very scared about next week, but I will say I will take it. Like if they want to send the market down next week, I'll gladly be a buyer out there. That's just kind of the way I'm viewing it. I think I have to continue to add pretty darn aggressively over the next few months. And I don't know what's going to shake out in 23, but I just want to be positioned well going into that year. And, be happy with all the positions I kind of built out in those sorts of things, because we have had so much fear and pessimism and everything thrown at the market in 2022 that eventually this stuff starts to just fall off. The mudslinging is just, eventually it falls off because there's so much dang mud on the wall already, and that's kind of the situation we have at this point in time. So yeah, I hope you guys enjoyed today's video. As always, I appreciate you joining me. Thanks for everybody that subscribed to the channel. Much love as always. Smash screw and have a great smash crew. And have a great day. My voice is not quite there, man. It's not quite there. Anyways, peace.